2023. What's up, world? Welcome back to Radical Investors, where we talk about stocks, crypto, NFTs, and all the ways how to make the money. I'm Wasu, and today I'm giving you another update on Meta, the stock that we all know and love and hate and make money on. Let's get into the video. Guys, before I get into the video, make sure you hit that like and subscribe button. I want to thank everybody that's already liked and subscribed to this video, to this channel. We are on our way to 3,000 users, 3,000 subscribers, and I thank you so much for that. Now, talking about Meta, their stock has increased about 7% today on the news that they are laying people off. Guys, this is a trend. Most tech companies right now have either decided to freeze or to lay people off. That has broader implications for our economy in the United States. When tech companies in particular decide to stop hiring young people and to start laying people off, that has a ripple effect into the real estate markets, into other markets like that. But in regards to Facebook's stock price, we saw it jump up because Wall Street loves when people cut costs. And that's what they've been asking Meta to do, to lay people off, to stop spending so much money in the metaverse. So we wanted to read this article from Yahoo Finance to see what the street is talking about in regards to Meta. Meta stock climbs as the Facebook parent reportedly joins Twitter and other tech firms with massive, not small time, but massive layoffs. Shares of Meta rose Monday after the Wall Street Journal reported mass layoffs are hitting the Facebook parent this week. The jobs cuts are expected to impact thousands of employees and could be announced as soon as Wednesday, per the report. Meta joins Twitter, Lyft, Amazon, and other tech companies that are adjusting their workforce size amid macroeconomic headwinds. Shares of Meta climbed more than 3% early Monday following the Wall Street report that the Facebook parent would announce thousands of job cuts as soon as this Wednesday. As soaring inflation and the Fed's tightening persists while recession fears abound, an increasing number of companies are trimming their payrolls. Meta joins the likes of Twitter, Amazon, Stripe, and Lyft, among others that have also announced layoffs in recent weeks. According to the journal, the percentage of staffers that Meta will send home is set to be a smaller figure than Twitter. Twitter laid off basically like everybody, but it could still shake out to be the largest number of cuts that a major tech firm to date, and mark the firm's first broad job cut in its 18-year history. Meta's October 26 earnings call, CEO Mark Zuckerberg said that the social media platform will focus its investments on a small number of high priority growth areas. So that means some teams will grow meaningfully, but other teams will stay flat or shrink over the next year. In this aggregate, we expect into the end of 2023 as either roughly the same size or slightly smaller organization as we are today. So far in 2022, Meta stock has tumbled more than 72%. The company market value has fallen by roughly $500 billion. $500 billion, guys. That is rough. Jesus Christ. Zuckerberg is not doing a good job, huh? And Zuckerberg personally has lost more than 60% of his net worth. In recent note, Bank of America's analysts forecast that Meta will see a decelerating top-line growth as well as growing pressure from its large metaverse investments. Those then will be further weighed down by macro headwinds. We believe in the near term, Meta's top line will remain under pressure as higher interest rates weigh economic growth and online advertisement demand. Okay. Guys, we talked about this in the back and forth video. My brother Hamed is super bullish on Meta, and I'm super bearish on Meta. And I'm super bearish on Meta because of the things that they said in this Yahoo Finance article. They talked about the growing top line, right? And it's when you actually break down Meta's or Facebook's core business, it's actually in decline. TikTok is absolutely destroying them when it comes to advertisement and users on their platform. TikTok is growing like gangbusters. More and more advertisers are going over to TikTok. So I think in the coming quarters, you're gonna see TikTok take up more of the online social media advertising market. And then you have the metaverse, which is going to take a really, really long time to build out. Now, if you are bowing down to the needs of Wall Street, saying that you need to lay off people, and they're laying people off in order to address the Wall Street fears, then what happens is you're not going to have the technical people necessary to build these things, right? So he said in the article that they're going to hyper focus on a couple of places. I'm assuming one of those places is the metaverse, but in the call on October 26th, a lot of people had a super bad taste in their mouth when it came to the metaverse stuff. So does that mean that they're laying people off in the metaverse division? We do not know. I guess we'll see on Wednesday, guys. But it is such an interesting story to follow. Such an interesting stock to follow, because Meta for my lifetime has been kind of forefront on like culture and technology and things of that nature. So it'll be very interesting to see what happens with the stock, guys. What do you think is going to happen? Do you think Meta is going to skyrocket on the back of the news that they're cutting jobs? It seems very in poor taste to be celebrating people lose their job, right? I don't know. Do you guys feel like I feel? Do you think Meta has very, very tough times ahead? Hit that comment section. Remember to like and subscribe. As always, happy hunting. We'll catch you on the next one. Peace.